Hello guys and welcome back to a new video. This one is not going to be like the previous ones. There is no technical analysis, no trading patterns, no models, and no new strategies. But today's topic could be the key to unlocking consistency in your trading journey. On this video, I'm going to tell you how moving on to the 5-second time frame has made me a better trader, how it made trading stress-free, and how I end almost every day in the green. I know this sounds too good to be true, but in this video, I'm going to prove to you that moving on to the lower time frames might be the best decision you will ever make in your trading journey. And I don't want you to just take my words for it. I want you to watch this video, hear what I have to say, and then go practice it and see for yourself. Before we start, we need to clear a few things up. First of all, this works only in futures. Why is that? In Forex, you can't go to the 15-second and the 5-second time frame and trade there because of the spreads. And even if you have zero spreads, you still have fees, and the tighter the stop loss, the higher the fees. So you can't do this in Forex, alright? This works only in futures, but personally, I prefer futures over Forex. I made the switch from Forex to futures. There is no spreads, zero spreads, extremely low fees. Some firms doesn't have fees at all, alright? And also the futures prop firms are more reliable than the Forex prop firms, especially at the moment, right? Every single week a new prop firm shut down. Another thing is that price is fractal, guys, so you don't have to unlearn anything. Whatever you are trading right now, you can see it on the lower time frames, alright? You can see it on the 15-second time frame, on the 5-second time frame. Price is the same. Whatever works on the weekly, it works on the daily, on the 4-hour, the 1-hour, 1 minute, 5-second, all the way to the 1-tick chart, alright? So price is fractal. Another thing, this is based on my experience. This is not something that I read on an article online or in a book. This is something I experienced myself. I tested out for months and months. I used to be a swing trader, then a day trader on the 5-minute and the 15-minute, and now I'm trading on the lower time frames in the 15 and the 5-second time frame. So the things that we're going to talk about in this video are based on my own experience. First off, let's talk about FOMO, the fear of missing out, one of the biggest psychological hurdles for traders. You can have the perfect strategy with a statistical edge, but when it comes to live trading, you might mess things up because of FOMO. So that's where the 5-second time frames comes to play. Trading on the 5-second time frame completely eliminated FOMO for me. Why? Because it gives me countless opportunities throughout the day. I get about 15 to 20 setups just from the New York session, both the AM and the PM. And that's just on one pair. With so many setups, I don't have to force anything. If a setup doesn't look good enough, I simply skip it without any internal conflict. I know another A+ setup is just few seconds or minutes away. So this lets me be super picky with my trades, alright? I cherry pick the A+ trades only. Now, compare this to trading on the 5-minute or the 15-minute time frame. You might only get one setup a day. So imagine staring at a chart for 2 hours, seeing a setup that's maybe a B+ at best, price is moving, and you think, I have spent so much time in here, I should take this setup, even if it doesn't meet all my rules, right? And what happens is that you end up taking the trade, and surprise, you lose. So with the 5-second time frame, I know there will be plenty of A+ setups. I just have to wait and not force anything. Some traders claim that lower time frames like the 1 minute or below are just noise and bad for your psychology. But I think it's quite the opposite. More opportunities means less pressure to take lousy trades. So remember that 90% of traders out there lose money. So why listen to them on social media? Test things for yourself and see what works for you. Now, the second reason why I prefer the 5-second time frame is how it given me more free time. So people often think that scalpers on lower time frames spend all day staring at charts and taking every single leg move. That's not true at all. If you are trading on the 5-minute time frame and only get one setup in the span of 8 hours maybe, imagine that setup applied to lower time frames. On the 5-second time frame, you can get a setup every 30 minutes or less. So here's how it works for me. I set up the chart for about an hour, sometimes an hour and a half. In that time, I can take 2 or 3 A+ setups and be done for the day. It's not about the number of points, but about the risk you put into those trades. So just because I caught a 10-point move, right, doesn't mean that I made less money than a guy who caught a 100-point move. It's about how many contracts I put on the trades that I took, alright? So this gives me a ton of free time. I get to backtest, review my trades, I get to touch grass and do other things I love. For those of you with day jobs, this is a game changer. You can trade for an hour before work, during lunch maybe, or whenever it fits your schedule. Just 30 minutes to an hour is enough to find a good setup and be done for the day. In contrast, day trading on 5-minute or 15-minute time frame might not work for you if you have a job. You might miss that A+ setup and end up forcing a bad trade later. For me, trading on lower time frames like the 5-second chart has freed up my day to do so much more. Moving on to the third reason, and for me this is the most important reason on why you should move on to the 5-second time frame. And this one accelerated my progress tremendously in just a short period of time. So when you start your trading journey, you follow a structured approach to reach consistency. First of all, you learn a model or a strategy, then you collect examples of that setup from hindsight charts to train your eyes. Next, you backtest it, refine it, and move on to the third step, which is demo trading or forward testing, and eventually live trading. So here's where the 5-second time frame comes in. During the demo and live trading phases, the frequency of setups is crucial. On a 5-minute time frame, you might see a setup once or twice a day, giving you about 5 setups per week. That's 5 data points to analyze during the weekend and learn from. Now, imagine using the 5-second time frame. You can see 10 to 20 setups per day. That's around 70 to up to 100 setups per week. More setups, guys, mean more data to analyze, faster learning, and quicker progress. You can't argue about this, alright? By the end of the week, you have a lot of information to refine your strategy and improve your trading skills, picking the parameters that work best and eliminate those that has no confluence in your trading strategy. Now, traders on the higher time frames need months to collect enough data to develop a refined model with a good win rate. But with the 5-second time frame, you can gather the same amount of data in just a month. So this rapid exposure, right, helps you to train your eyes to recognize setups quickly, understand when they work, and identify when they don't. So basically, the more price action you see, the better you get at reading the market. The more data you have on your setup or your one kick, the better chances you have to extract the winning formula from those trades, right? It's a no-brainer that the 5-second time frame accelerates your learning curve and takes your trading to the next level in a fraction of the time. You might argue that you can have more data just by backtesting. For example, you can collect 100 setup example in a week from backtesting, but backtesting is not like reading price live. It's not like extracting those setups from a live environment. A backtesting environment is a controlled environment, not like the live markets, alright? So those are two different things. So now I believe that this is the end of this video. I gave you 3 reasons of why you should consider at least moving on to the lower time frames. Again, don't take my words for it. Try it for yourself, alright? Take some time, zoom in, apply what I have said, and decide for yourself. Now, if you have any questions, you can DM me on my Twitter account, or you can leave a comment down below, and I'll answer you as soon as I can. Now, happy trading, and good luck.